Stellantis has just done something that nobody could have predicted. They have drastically reduced car pricing by an astounding 60%. Customers are in disbelief, and competitors are scrambling as a result of this seismic upheaval in the car business, which goes beyond a simple transaction. Once considered luxury purchases, trucks and SUVs are now available at astronomically high prices. However, why is Stellantis acting in such a dramatic manner? What's the catch? What effects will this have on customers, sellers, and even rival businesses? Above all, what effects does this have on you? What's going on? Imagine entering a dealership ready to deal with the typical stress of automobile shopping: exorbitant costs, little opportunity for haggling, and the depressing thought that perhaps now isn't the appropriate time to buy. Now picture yourself entering that same dealership lot and being astounded by the prices. A brand new Ram 1500 for almost half the price it usually costs. A Jeep Grand Cherokee that is less expensive than many used cars and still fits inside your budget. Stellantis has made it a reality, even though it sounds too good to be true. This isn't a one-time marketing gimmick or seasonal promotion. Stellantis has reduced prices by up to 60% on all of its products. Once considered status symbols for high earners, trucks and SUVs are now affordable for regular consumers. The worst part is that they aren't outmoded, unpopular models being discontinued. We're discussing flagship cars, the kind that people aspire to buy. For many years, automakers used high sticker costs to give the impression that their vehicles were exclusive, leading buyers to feel as though they were investing in distinction. Stellantis has defied that reasoning, demonstrating that high-end cars don't always have to cost high prices. This is a daring declaration that is having an impact on the whole auto industry, not simply a price reduction. This is significant because it's not just a sale. Rather, it's a revolutionary move that has the potential to permanently change the way we see purchasing a car. However, why would Stellantis do such a daring and ostensibly dangerous move? An issue that has been accumulating for years holds the key to the solution: converting overproduction into possibilities. Can a corporation as a whole be saved by transforming a crisis into a sales boom? For many years, overproduction has been a silent killer in the automotive sector. A perfect storm of monetary losses and logistical difficulties arises when manufacturing produces more cars than the market requires. Stellantis was caught in the middle of this storm, with unsold inventory piling up in dealership lots. This issue has its origins in the epidemic. When global supply systems were disrupted, automakers found it difficult to meet demand fluctuations. The market had changed by the time production resumed, leaving manufacturers with too many cars and fewer consumers prepared to buy. Like many of its rivals, Stellantis was left with thousands of trucks and SUVs sitting around doing nothing, each of which was a depreciating asset. Imagine rows of Jeep Wranglers and Ram 1500s parked in storage lots. Their worth steadily declining. Stellantis saw this as an opportunity that was simply waiting to be taken advantage of, not just a problem. They took a risky move rather than gradually lowering car prices or stopping production to allow demand to catch up. They drastically cut prices rather than merely lowering them. Desperation was not the driving force behind this action. It was a well-thought-out plan to move the narrative, draw in customers, and clear off goods. Stellantis transformed what might have been a financial catastrophe into a competitive advantage by providing enormous discounts. They have demonstrated that, on occasion, facing a crisis head-on with courage and ingenuity is the best course of action. This is about changing the rules of the game, not just about selling cars. However, what does this signify for the typical consumer? The response is a once-in-a-lifetime chance. The windfall for consumers: what if you upgraded your car and it ended up saving you money and changing the definition of value in the automotive industry? Many Americans felt that purchasing a new car was out of their price range for many years. For trucks and SUVs, sticker prices skyrocketed above $50,000, leaving buyers with little choice but to buy a used car, push their budgets to uncomfortably tight limits, or wait to buy. However, Stellantis' revolutionary price reductions have completely altered the market by making luxury cars affordable for regular consumers. For instance, the Ram 1500 is a truck renowned for its comfort, performance, and longevity. This iconic vehicle is now offered for prices starting in the low $20,000 range under Stellantis' new pricing strategy. It is among the best value options available on the market right now, because it costs less than half what it did a year ago. Similar in price is the Dodge Durango, a family-friendly SUV renowned for its strength, roominess, and adaptability. Even high-end models like the Jeep Grand Cherokee Trailhawk, with its sophisticated interior, cutting-edge technology, and exceptional off-road capabilities, are now within the reach of consumers who previously believed they could only imagine owning one. This is beneficial for more than just first-time purchasers seeking affordability. Families can now upgrade to safer and more dependable cars without breaking the bank. Small business owners can grow their fleets without breaking the bank if they depend on reliable trucks and SUVs to expand their operations. Even enthusiasts can now realize their long-held dreams of owning expensive trims with cutting-edge features. Furthermore, the advantages extend beyond the dealership. Reduced purchase costs result in smaller loans, lower interest rates, and much cheaper insurance rates. These financial benefits can mount up over time, making the choice to purchase now not only alluring but also wise from an economic standpoint. Customers who move fast during this historic price change will reap the rewards for years to come. This is an opportunity that is changing the way Americans view car ownership, not just a sale. It's a unique opportunity to get better value for your money than ever before. However, as consumers rejoice over this momentous occasion, the rest of the industry is frantically trying to adjust to Stellantis' audacious and revolutionary move. There is no doubt that the automotive industry may never be the same. Effects on the industry Stellantis turn the entire industry upside down in addition to cutting prices. Automakers like Ford and General Motors have been using the same business strategy for decades. Establish a brand centered on exclusivity, quality, and innovation, then charge a premium price to match. Customers began to assume that purchasing a high-end truck or SUV would come with a high-end cost. That expectation has been shattered by Stellantis. The industry has been rocked by the 60% price reductions, which have done more than just clear Stellantis lots. Long regarded as the pickup industry standard, Ford's F-Series trucks are now up against fierce competition from the Ram 1500, which is priced at almost half as much. With the Chevrolet Silverado and GMC Sierra models, General Motors must now choose between following Stellantis' example and risking losing market share to these unbeatable offers. This is more than just a war of prices. Additionally, Stellantis is altering how dealerships function. Dealerships used to have a lot of control over prices, which caused buyers to have inconsistent experiences. However, Stellantis has implemented stringent pricing guidelines to guarantee that all discounts are the same. By doing this, the back-and-forth haggling process that many buyers dread is eliminated, making the car buying process more transparent and alluring. Other automakers now have to decide whether to follow Stellantis' new transparency and affordability standards or risk falling behind. Beyond price, there are other repercussions. In light of Stellantis' audacious move, marketing strategies, production procedures, and consumer trust are all being re-examined. This is not merely a Stellantis tale. Rather, it marks the start of a revolution that has the potential to completely alter the auto industry. Can Stellantis maintain this momentum, is the question. What will happen to the auto industry next? Strategic discounts power cutting prices involves changing an entire business model, not just selling cars. Discounts are frequently employed as temporary tactics to increase sales or get rid of outdated inventory. Stellantis, however, is changing the rules of the game rather than merely lowering prices. A 60% price cut is a strategic move intended to control the market and alter customer expectations rather than a random choice. Think about this. Stellantis could have used the industry-standard gradual price reduction techniques to gradually reduce the price of older models. They decided to go big instead. By lowering the price of well-known models like the Jeep Grand Cherokee and Ram 1500, Stellantis made sure they would make news, take center stage in discussions, and, most importantly, overrun their dealerships with customers. Inventory clearance is only one aspect of this strategy. It denotes a daring, customer-focused strategy that questions established ideas of brand value. In the past, automakers used premium pricing to convey prestige and quality. Stellantis is not only making a lot of money by shattering this stereotype, they're also drawing in a new group of consumers who might have previously thought about other brands. It is impossible to overestimate the psychological impact of these discounts. These cars are now viewed as fantastic deals by buyers who might have been hesitant in the past. The appeal of getting a brand new, premium truck or SUV for a significantly lower price has revitalized the market, creating a sense of urgency and redefining what customers expect when they think of value are more important goals here than merely selling cars. However, Stellantis is changing the way dealerships function rather than merely offering discounts to attract customers. Implementing dealer compliance, if customers never notice a discount, what good is it? Stellantis is ensuring that nobody is left behind. Automakers and dealerships have always had a complicated relationship. Historically, dealerships would determine the final pricing after manufacturers set suggested retail prices. Customers had a disjointed and uneven purchasing experience as a result, with some paying significantly more for the same car than others. That confusion is ending thanks to Stellantis. Dealerships must maintain the advertised prices under Stellantis' stringent new regulations, guaranteeing that every customer takes advantage of the enormous savings. This is a requirement, not merely a recommendation. Stellantis has previously shown that they are prepared to terminate franchise agreements with dealerships that do not comply. In the automotive sector, where dealerships have traditionally had considerable pricing power, this degree of enforcement is unprecedented. This poses a challenge as well as an opportunity for dealerships. They get access to a flood of new customers attracted by Stellantis' aggressive discounts, even though they lose some control over pricing. By removing the frustration that customers frequently experience when navigating opaque dealership pricing practices, the pricing model's consistency and transparency also contribute to the development of trust. Additionally, Stellantis has implemented rewards for compliant and successful dealerships. Stellantis is rewarding partnerships that share their vision in a number of ways, including marketing assistance, expedited inventory restocking procedures, and bonuses for meeting sales targets. This strategy makes sure dealerships feel encouraged as they adjust to these big changes. Customers and dealerships benefit from a simplified, open purchasing process that increases confidence and boosts revenue. However, as businesses adjust to Stellantis' audacious strategies, the competition is feeling the heat. What are the reactions of other automakers? Competitors hurry to answer, can the competition afford to join the pricing war that Stellantis has just started? Although competition is nothing new to the automotive sector, Stellantis' 60% price reductions have presented a challenge few anticipated. Now, automakers like Ford, General Motors, and Toyota must decide whether to match Stellantis' aggressive pricing or risk losing a large number of customers. For example, Ford's F-Series lineup has long dominated the truck market. However, even the most devoted Ford buyers may begin to re-evaluate their choices when a comparable Ram 1500 is offered for much less. General Motors, which has depended on the success of its GMC Sierra and Chevrolet Silverado models, is also under pressure to defend their higher pricing. Toyota, which is renowned for its dependability and durability, has historically relied less on aggressive pricing tactics. But Stellantis' action has made them rethink their strategy. Their trucks, such as the Toyota Tundra and Tacoma, are now in competition in a market where consumers are looking for better value. This involves reconsidering tactics rather than merely cutting costs. Inefficiencies in conventional production and pricing models have been brought to light by Stellantis' audacious move. Automakers need to look for innovative ways to cut costs without compromising quality if they want to remain competitive to keep clients. Some businesses are concentrating on providing loyalty plans, extended warranties, or extra incentives. To provide more reasonably priced options, some are increasing the production of entry-level models. It's difficult to match Stellantis' 60% price reductions without negatively affecting profit margins, though. This is a fight for customers' hearts and wallets, and Stellantis has raised the stakes. It's not just a price war. Customers find themselves in an unexpected position where they have all the power while rivals scramble to adapt. The shift in consumer power, the buyer is in control of the automobile market for the first time in decades. The market for automobiles has always been dominated by sellers. Customers were forced to accept the offered prices because automakers set the terms. Customers now have more options, better prices, and more transparency in a buyer's market thanks to Stellantis, which has completely changed that dynamic. Customers now have unprecedented access to cars that were previously unaffordable thanks to these price reductions. Stellantis' approach guarantees that there is a car for everyone, whether they are a family seeking a roomy SUV, a contractor in need of a dependable truck, or a first-time buyer looking for an economical car. Stellantis dealerships are not the only places affected. In an effort to stay competitive, rivals are providing more aggressive financing options, rebates, and promotions. It was practically unheard of in the past, but buyers now have the ability to shop around, compare offers, and demand better deals. The car buying process is now much less stressful thanks to Stellantis' openness. The days of negotiating prices or being concerned about unstated costs are long gone. Customers can now be sure that the price they see is the one they will pay. This change isn't just about cost. It's also about trust, which many consumers felt was lacking from the automobile purchasing process. This marks a paradigm shift in the way we view car ownership, not just a favorable moment to purchase a vehicle. However, it is still unclear whether Stellantis can maintain this approach over time and what this means for the automotive sector going forward. At that point, the situation becomes even more intriguing. The dangers Stellantis faces for consumers, a 60% price reduction, sounds fantastic. But what does Stellantis stand to lose? This audacious pricing strategy is not risk-free for Stellantis. The immediate effects, such as dealerships being overrun with customers and inventory being cleared, are obvious, but the long-term effects might change the company's financial situation and place in the market. The impact on profit margins is the first and most evident risk. Strong truck and SUV sales margins are essential to automakers' ability to cover the high expenses of R&D and manufacturing. While a sharp price reduction may aid in inventory clearance, it also reduces those margins. Critics are concerned about the possible financial strain if the move doesn't result in sustained market share growth or increased brand loyalty, despite Stellantis' assurances to investors that this is a short-term strategy intended to stabilize operations. Perception of the brand is another major risk. For many years, Stellantis automobiles, especially those in the Ram and Jeep models, were regarded as high-end products with correspondingly high prices. Stellantis runs the risk of undermining the prestige attached to its goods by sharply cutting prices. When buyers are aware that a Ram 1500 was sold for a fraction of its original price, will it still have the same cachet? Maintaining an image of exclusivity is frequently just as crucial for premium brands as providing quality, and Stellantis might find it difficult to achieve that balance. The question of whether this approach is sustainable also needs to be addressed. Although a surge of buyers has been drawn in by the price reductions, what happens when the initial enthusiasm wanes? Without implementing additional discounts, will Stellantis be able to sustain its sales momentum? Will customers stop trusting the brand or think it is inconsistent if the company raises prices back to what they were before the discount? The short-term increases in sales volume might be outweighed by the long-term harm to consumer confidence. Stellantis has made a significant wager on its capacity to completely transform the market, but it is unclear if this wager will be successful. The industry as a whole is changing as a result of this drastic action, even as Stellantis struggles with these issues. Other automakers are keeping a close eye on things, considering their options, and getting ready for a market that might change drastically in the future. The industry's future is on the line, and the stakes are higher than ever. The market collapsed for used automobiles when new trucks are less expensive than their used counterparts. What happens? Anarchy and chance. Stellantis' historic price reductions have completely upended the used car market, which was once thought to be a safe haven for buyers on a tight budget. Previously holding their value exceptionally well, trucks and SUVs are currently losing value at record-breaking rates. Consider a buyer who paid $45,000 for a Ram 1500 just 2 years ago. These days, a brand-new model could cost $25,000, making used cars difficult to sell, even at steep discounts. The market has been rocked by this change, and dealerships and private sellers are frantically trying to adapt. The demise of the used market is disastrous for private sellers. Many are discovering that the value of their cars, which were once thought to be valuable assets, has drastically decreased. For people who bought trucks or SUVs during the pandemic, when prices were at an all-time high, this is especially painful. They're currently stuck with cars that lose value more quickly than they can sell them. Dealerships that specialize in used cars are also suffering. Due to the extremely low prices of new trucks and SUVs, many consumers are completely avoiding used options. Automobiles that used to move fast are now left on lots for months at a time, increasing carrying costs and decreasing revenue. However, the demise of the used market presents a fantastic opportunity for buyers. Customers on a tight budget can now find amazing discounts on both new and used cars. The increased affordability is especially helping first-time buyers, who can now finally afford high-quality trucks and SUVs that were previously unaffordable. Not only are consumers benefiting,